So, welcome back, everybody. I hope everybody's having a fantastic day, too. Welcome back to a lunch keynote presentation. I'm really looking forward to this one because some of you got a taste of it yesterday already when Warren was presenting Queens Road Capital. Now I think he's going to expand a bit on... Warren, are you going to tell us how we can invest like you? Are you going to teach us?
That's precisely what I'm going to do.
Fantastic. Awesome. So I'm really looking forward to that because I interviewed him earlier today as well, and Warren is somebody I could listen to all day, to be honest, and I hope you can too. And of course, I called him the godfather of risk-free investing in junior mining. And you know that is actually an oxymoron because there's no risk-free investing in junior mining. But he's found a way to do it in a profitable way, and which helps the companies and which helps himself, which is good. And really appreciate that he's here. He's from Hong Kong. He lives in Hong Kong, so he came out all the way from Hong Kong for this presentation. And Warren, I tremendously appreciate it. Please start your presentation. I know people will come in once you start talking. So, good luck.
Oh, thank you, sir.
Want a bear hug?
Thanks, Kai. Clearly, I don't have the drawing power of a Robert Friedland. Everyone's out there, no one's in here. But anyway. Well, thank you for joining me this afternoon. I have met a number of investors over the course of the last 24 hours, and very entertaining. So I presume that everyone in this room is an investor, otherwise why in the world are you here? A fellow came up to me the other day and told me, look, you know, I'd like to get in early stage, a high risk. I'm a high risk investor. And I'm thinking to myself, who wants to be a high risk investor? I want to be a low risk investor. I want no risk whatsoever. I want to have high reward, but I want as low a risk as possible. Imagine how much better off you'd be. And you're all experienced investors here. You've done this before. So, you know, the definition of an experienced investor is you've had a lot of successes over the years. You've also had a lot of failures. You've lost a lot of money. Imagine how much better off you'd be and how happy you'd be if you could keep all the winners and just eliminate all the losers. Like never have a loss. How much better off would you be? You'd be a lot better off. You'd be a lot happier. You'd look at your screens, you'd look at your portfolio every day and feel a lot happier because there's no more red anymore. It's only green. Just how big is the green? Is it really big or just a little big? So that's what we do at Queens Road Capital. We eliminate the red and we just do green. So you're probably wondering, how the world do you do that? Well, let me tell you, it's not something that I woke up one day 3 years ago when we started the company and said, this is what we're going to do. No, it was an evolution. It was an evolution of decades. So I'm going to share a little bit of that evolution with you right now to lead you to where we are today. So in order to do that, I have to give you my entire life story, which is fascinating. You know, I grew up in a mining town in northern Canada. My father is a geologist, probably like a lot of you. He was an eccentric geologist, probably like a lot of you. But he gave me one piece of advice. He said, Warren, you're a bright kid. You can probably do whatever you want to do. That's great. Do whatever you want to do. Just don't become a geologist. And very good advice, certainly. And so I came home one day and I said, okay, Dad, I'm off to university and I'm going to be a mining engineer. And he said, well, that's okay. Mining engineers are good. You know, just don't want to be a geologist. So that was lesson number one. Maybe too late for some of you in this room that are already geologists. But anyway, of course, graduated as a mining engineer, went to work for Cominco in the Northwest Territories. John McConnell's back there. He'll be familiar with these stories. But you know, that lasted all of 6 months before I got my first layoff notice. And so that was the end of my mining career. So I had to look for career stability. And I had to find an industry that would employ me because all the mining engineers in the world were now unemployed. Of course, the geologists had all been unemployed for the last 3 years, so because they're always the first ones in the line of fire, always the first ones to get laid off. Anyway, so I joined a bank and managed to survive in the banking environment for 26 years. It wasn't without its challenges, though. There was the crash of '87. We all lived through that. Had to survive that in the banking environment. And you may or may not recall, there was basically a similar, smaller, but pretty similar crash in '90, '91, certainly in the resource market. So it had to survive that. And then there was the Bre-X debacle later on that decade. What was that, '97? So at that point I said, well, probably worth getting out of Canada for a while because the markets were going to be pretty quiet post-Bre-X. So an opportunity came up to move to Australia and run the bank in Australia. So waved goodbye to Canada, waved goodbye to the high taxes in Canada. That was a good thing. Wound up having to pay Australian tax, which was the only place on planet Earth where the taxes were higher than they were in Canada. So that was a bad thing. So I learned. But then I proceeded to twiddle my thumbs for basically 3 years, because you all in this room will remember 98, 99, 2000, gold price goes down to $200 an ounce. I'm running a gold brokerage business in Australia. Everyone's talking about the internet and mobile phones and telephony. And what about mining? What about gold? No, sunset industry, don't need any of that stuff anymore. You're done. Career is over. Well, thankfully the bank sent me a lifeline and they said, Warren, you're wasting your time in Australia. We want you to move up to Hong Kong. There are no mines there. So we'll put your mining engineering degree to good use. There are no mining engineers, there are no mines. There's nothing for you to do except good old-fashioned banking and look after this fellow Li Ka-shing. And at this point, I'm thinking, well, anything to keep a job. So absolutely, go to Hong Kong. Good news, now I don't pay any tax. It went from the highest tax bracket on planet Earth to no tax. So that was a good move. But the most important thing about moving to Hong Kong was meeting this fellow Li Ka-shing, Mr. Li. And I don't know how familiar you are in Europe with Mr. Li. He's been for the last several decades one of, if not the richest man in Asia, one of the richest men in the world. He's not one of these fly-by-night billionaires like they have so many of them in China, where you're the richest man in China one year and then the next year you've either blown it or you've been put in jail, one or the other. So the name at the top of the list changes every single year, and Mr. Li is right here, and it's always on the incline, always going up. But in Europe, you'd be familiar, the 3 telephone network, he's 3. All the ports around the world, all the ports. It's the biggest container port operator on the planet, Rotterdam, Hong Kong, Shanghai, both sides of the Panama Canal, both sides. So he's a very wealthy guy. He's worth probably 70, 80 billion. And he had 20 billion in cash on deposit at our bank in Hong Kong. 20 billion in cash. And we'd lend him money for different businesses. So we had about 10 billion out to him in loans. But they were all secured by the cash deposits that he had. Anyway, a great guy to know, if you can get to know him. And obviously very important to the bank. And he was the largest single shareholder of the bank at the time. So it was an important job relative to the bank. But they told me, your job every morning, get up, make sure Mr. Li is happy, don't do any mining deals, and stay out of trouble. That was my job. And I did that job for 10 years. Got to know Mr. Li a little bit better. But as everyone in this room knows, mining's in your blood. It never gets out of your blood. And what happens while I'm in Hong Kong? China emerges as the dominant force in mining. China's gone from nothing to, oh yeah, we consume 50% of everything. And I'm looking at Mr. Li. Mr. Li has no investments in the mining industry. He owns everything. He owns a piece of everything. He has not a single investment in mining. So at one point in 2006, I went to him and said, Mr. Lee, I'm a mining guy at the end of the day. You should be investing in mining. Let me help you do that. Warren, why do I care about mining? You know, I like things that I can control. I like things where it's all basically rigged. I like things where the outcome is certain. I don't like risk. See, we are going to get to Queen's Road eventually because it's a whole discussion about risk. He says, resources, you know, copper, gold, prices go up, down, up, down, up, down. How do you make money in that? He said, you know, I like things that just go up. And I said, well, that does make sense. I said, but we can probably do this and try to eliminate a little bit of this volatility. The most important thing is this industry is dominated by China, and it's going to be dominated by China for the next 100 years. There's no person on planet Earth that knows what's going on in China better than you. Mr. Lee was the largest single investor in mainland China. If you go to Tiananmen Square, the entire city blocks, all surrounding Tiananmen Square, were owned at the time by Mr. Lee personally. Not even in his companies. He owned them personally, and he developed them personally. He knew the president, he knew the premier, he had all the best connections, and he was highly revered in China. I said, you know what's going on. You know if they're going to go from 50% consumption to 90% consumption, or you know if they're going from 50 down to 10. You tell me whether to put my foot on the gas or put my foot on the brake. I'll pick the mining assets, because that's what I do. But you tell me full steam ahead, or Warren, sell everything. And he said, yeah, well, that sounds good. No, I think I can do that. So we agreed, and I started investing money for Mr. Lee. But he said, okay, Warren, we're going to do this. But I have 3 rules. And again, this is coming to the conclusion. Rule number 1, you don't lose my money. And he was serious about it. He meant it. You couldn't lose any money. You couldn't have a loss on a transaction. You couldn't have a down year. You couldn't go to him and say, oh, look, the price of gold's down. We took a lot. No, I don't do that. You can't. You just come in and tell me how much money I made. You do not lose his money. And he meant it. If I came in December that year and said, Mr. Lee, we lost it, he would have said, Warren, you're a great guy. There's the door. You're finished. And I saw it in action. I saw him terminate the careers of many a fine fellow. That's rule number 1. Rule number 2, you don't get my money for free. You can spend hundreds of millions of dollars of my money, but every year, in addition to you not losing it, you have to come up here to my office. He's in the penthouse of Chung Kong Center. We will sit down prior to Christmas at a coffee table. Nice lady will come in, bring us each a cup of tea. We'll sit there, wish each other Merry Christmas, Happy New Year. Then you'll get up after 15 minutes, because that's all you get, 15 minutes. And you're going to leave a check on the coffee table. And you're going to leave a check every year. That's my dividend. You do not get my money for free. And I don't want to hear about, oh, the price of gold dropped, or there was a problem at the mine, or no, it was like working for the mafia. You know, you pay me my money. I don't want to hear your problems. You pay me my money. If you dare come up here and we have tea at Christmas time, and you don't leave a check at the end of our tea, there's the door. You're gone. So, rule number 1, don't lose money. Rule number 2, pay me a dividend every Christmas. Rule number 3.
What was the rate?
I had flexibility. It was more symbolic. It was more symbolic. You just have to give him some money because it's not for free. The rate was sort of under my discretion. But believe me, the bigger the check, the bigger the check I got in return. So it was mutual. Rule number 3. Look, this mining, very, very risky business, very risky. So that means big reward, right? We're going to make a lot of money. We're going to make a lot of money. If we don't make a lot of money, there's the door. So here we are. It's at this point, 2008, 2009. I've got my 3 rules. We're going to invest Mr. Lee's money in the mining sector. We're not going to lose any. We're going to write him a dividend every year. We're going to have big returns. What the hell have I gotten myself into? How the hell am I going to do this? And over the course of the next 12 years, we did it. Never lost on an investment, paid him a dividend every year, and made him a lot of money. And he's still making it, even though I don't work for him anymore. And I'll explain some of the money that he's made. But we did it. How did we do it? We did it by developing a business plan. This was a business that was called CEF Holdings. And CEF Holdings was a 50-50 joint venture between Mr. Lee and Canadian Imperial Bank of Commerce, CIBC. So they were 50% owners, and there were 2 employees. It was me and my secretary, and that was it. Over the course of the next 12 years, I spent about $0.6 billion of his money in a variety of mining ventures, and he's made over $1 billion in profit in return. We developed a business plan to reduce risk, protect your downside, and keep unlimited upside. And that's mainly through the use of structure, mainly through the use of convertible debentures. Long story short, 3 years ago, the bank regulators in Canada said to the Canadian bank, they said, you can't do this. You can't be taking deposits from good, hard-working Canadians and using some of those deposits to invest in highly speculative mining stocks. You're done. So the regulator came in, shut down the business, and I started my own business. I said, well, this is working really well. Let's do it ourselves. I must say I had some encouragement with some other friends who happened to be billionaires in Australia. So I started Queen's Road Capital 3 years ago. But Queen's Road Capital is simply the continuation of CEF, the same business plan. The only difference is that I've replaced a lot of the owners, Mr. Lee, a Hong Kong billionaire, with 5 Australian billionaires. And we're a public company. We're listed in Toronto. You all can buy it, and at the end of this talk, I hope you have a close look at it. But you can go on this ride along with the Australian billionaires, along with Mr. Lee and many of the Hong Kong employees who are all shareholders of Queen's Road. And we continue this business plan. So what do? We reduce risk. We're a low-risk, high-return investor. And guess what? We pay a dividend every single year. We paid a dividend at the end of our very first year of operation, and we increase that dividend every single year. First thing we do, it's all about the ore body. If you invest in a great ore body, you're going to make money. There is no downside. It's very, very simple. It's a question of how much money you're going to make, but you're not going to lose money. So reduce risk by buying the best asset you possibly can. I don't care what commodity it is. I don't care if it's iron ore or lithium or copper. If you've got the best ore body, you're going to make a lot of money. So the very first thing we look at is it a great ore body? Once you pass that modest hurdle, then you have to look at jurisdiction. Where is that ore body? Well, guess what? If it's in a nice, safe country, you're fine. You don't have any geopolitical risk. So we only invest in great ore bodies in nice, safe countries. If it's a great ore body, but it happens to be in the Philippines, wave goodbye. I'm not going to Indonesia. I'm not going to the Democratic Republic of the Congo. I'm not going to West. I just don't go there. Mr. Lee always said, Warren, no geopolitical risk. All of Mr. Lee, $80 billion. Where is all his money? It's in Hong Kong, and it's been gradually getting out of Hong Kong. Australia, Canada, UK, and Europe. He could invest everywhere. He could invest all through Asia. That's where he goes. Virtually zero geopolitical risk. He said, Warren, I know you're in the mining business, so we're going to have to sort of go where the mines are. We can't like go to the UK. Not many mines there, but we can go to Australia. We can go to the US. We can go to Canada. He said, you might occasionally, he said, I know you might have to go to Argentina and Chile because that's where the mines are. He said, but no funny countries. We referred to them as funny countries. We don't do that. And that's what Queen's Road does. Low geopolitical risk, great ore body, safe country. And then finally, the last thing we do is, once you get that, once you get the great ore body in a safe country, you don't buy the shares. Because great ore bodies, great countries, wonderful, but guess what? Common shares trade up and down. And remember, Mr. Lee, we don't want any of this. We don't want any of this. We're drawing a line. We come in here, and that's our investment, and then it goes up. None of this down. And we do that by convertible debentures. So we identify those companies, then we negotiate a convertible debenture with those companies. What benefits does that bring us? We get paid to become their shareholder. Every quarter, they pay us the coupon on that convertible debenture. They pay us. We get all the upside on the stock. Every single convertible debenture that we do is exactly the same. 130% premium to market for conversion of our debt security into common shares. Anything above that, if the stock goes to the moon, and eventually every single one of these companies, their stock will go to the moon because, I'll repeat, they're great ore bodies in a safe country. They all have their day in the sun. Unlimited upside. Just what Mr. Lee wanted. The unlimited upside, big returns. That coupon that the company pays us every quarter, I save them all up. And at the end of the year, Christmas time, all of that money goes out to the Queen's Road shareholders. So, we don't lose your money because we're holding debt securities. We pay you a dividend every year, and that dividend goes up every year. And we have unlimited upside. That's what we do at Queen's Road. That's what this 35, 40 years of experience has finally taught me. And I encourage you to do the same. But if you don't feel like you can do that on your own, you don't have to. Just buy Queen's Road stock. We'll pick the ore bodies in safe jurisdictions. We'll pay you a dividend at the end of every year, and we'll give you unlimited upside on the Queen's Road stock. I'll do the job for you. I'm doing it for a bunch of billionaires in Australia and China already. You just do that. You could try to do it on yourself, but a lot of you don't have the same relationships that I do with CEOs around the world that I can negotiate these convertible debentures. So our portfolio, we just wrote one for NextGen, I mentioned it yesterday, for $70 million US 6 weeks ago, and the stock is already through the conversion premium. So, but if you can do it yourself, I encourage you to do it. Low risk, high reward. As Kyle alluded to, bordering on no risk. But the next best thing, buy Queen's Road Capital, QRC. Thank you.
We do have time for a few questions, actually. So do we have any questions from the audience first? Because I have, maybe Warren, while we're setting up, what's the dividend yield?
Dividend yield, I hope to always maintain it as low as possible because, as you know, yield is what you pay in the dividend divided by the stock price. And my primary goal is to get the stock price way up. But right now, the mathematical calculation is 3%. So the yield is 3%. I hope I get it to 1.5% because I want the stock price to double.
Perfect. We have, guys, Christian? Yeah?
I have one question to the convertibles. When you negotiate this with the companies, how much in % of their financing do you have to offer them to be able to negotiate the terms that you want with them?
I'm not quite sure.
How much money do you have to put on the table to get the terms you want?
They all want as much money as they can possibly get. I'm limited by the amount of money that I actually have. Believe me, I wanted to put 100 million into NextGen. I dug into every single bank account we had and scraped together 70, and that was all I could give them. Believe me, they wanted 100. Yeah, I just write as big a check as I possibly can, depending on how much cash we have in the company. You know, the first one we did was 15 million 3 years ago. The last one we did was 70 million. So those checks are growing as we grow, and they'll continue to grow. Our biggest challenge right now is obviously the mining industry is a massive consumer of capital. Always is, always will be, which is great for people like me who are a provider of capital because there's unlimited demand. So there's always opportunity to invest more money. I'm only limited by the amount of money that I have access to. And great incentive to make that bigger and bigger.
I have the same problem, actually.
Yes,
just the money I have access to. But I'm not sure it's enough to satisfy companies. Do we have any more questions from the audience? We have one back from Bob. No, just for recording.
Here's a tough question from the audience.
What's a typical interest rate on your convert?
It's obviously going up. You know, the lowest one we ever did was 7.5, which was the original NextGen, which was 3 years ago. Yep. The last NextGen we did was 9. The average for the portfolio right now is 9.4. The next investment we do, which will be probably next week, will be 10. Yeah. And then I don't foresee anything being less than double digits for the next 3-4 years. Yeah. So they'll all be double digit. Yeah.
All right, thanks.
Which currency is that? Currency?
Everything I talk about is US dollars. Mr. Lee insisted always, and I think it's a great guidance, even though we're a Toronto-listed company, and I live in Hong Kong, and my shareholders are all in Australia, everything is US dollars, our financial statements. Mr. Lee always would say, Warren, when you come up at Christmas time and tell me whether you made money, you only quote in US dollars. Don't tell me you made money in Canadian dollars, because who cares? Who cares? It had to be US dollars, and he was very specific about it.
Do you have a stock listing outside of Canada as well?
We actually are listed in Frankfurt. I don't think we ever trade there, so probably a very big bid-ask spread. But right now, main board, not Venture Exchange, main board of Toronto is the place to go.
Fantastic. I think we're out of time, Warren. Really appreciate it. Thank you so much. And you're going to be around for a bit more.
I'll be around all afternoon. Thank you.
All right.